Hello and welcome to myfinanceteacher.org. In this video we're going to have a quick look at gold and gold miners, specifically GDX. If you are watching this video on my YouTube channel, it's probably already outdated. If you want to receive timely updates that might be helpful with some of your investment decisions, however this is not investment advice, make sure to go to myfinanceteacher.org and join the members list. For now though, I first want to draw your attention to this chart of net imports of gold into the US. And we see that in March, net imports of gold into the US nearly reached 40 tons, whereas the last time US was net importer of gold was in May, June, July of 2016. Let's have a quick look at the chart and see what happened around that time to gold price. Looking at the weekly chart, we see that early 2016 is when that bear market in gold finished with a low just over $1,000 per ounce, and since then we've gained over 70% in several years. And that period of May, June, July is within this blue area, and we see that within this period gold price gained around 6%. Notice that this period took place after an intermediate rally in gold has already produced most of the gains from that low at about 1050. Within that period of net imports, we see that one intermediate cycle has produced a declining phase followed by another rally in gold prices. And a few months after that period, gold price dropped significantly. Now moving on to March 2020. That would be these several candles within the blue area. Again, we see a decline that was bought by the investors in the US, and we also see a bump into the rally of the next intermediate cycle. I think this bump is likely to continue up to that round number of 1800s, and just like last time in 2016, we might see a decline in gold price as we move into the end of the ongoing intermediate cycle. To be honest, this is only a speculation, trying to see if the history rhymes compared to what we saw last time with net imports into the US. Next, let's have a look at a zoomed-in chart of daily candles. And over the last couple of days, gold has broken above 1700 and even above 720. However, I'm not 100% certain at the moment that gold is going to just continue pushing higher all the way to, say, 1800. If we have completed this first daily cycle in gold, it kind of turned out to be a little bit short, lasting for either 32 or 36 days, depending on which candle week is the start of the cycle. Usually these cycles in gold last for about 1.5 to 2 months. It is possible to have a short cycle though. So as I said, in my personal portfolio, I'm already 60% allocated to GDX and other selected miners. So if gold does take a few more days to decline, possibly tag our target of 1650, that would give us a cycle of a regular duration of nearly 1.5 months, making it a more clear point for adding more capital into this long trade. However, although that would be nice and clean, I'm not going to sell any of the holdings that I have at the moment, hoping to try to get in at a lower price. We're going to come back to the strategy in a moment. First, let's have a look at GDX. Today it looks like GDX is breaking out of this long-term resistance at about $32. And actually yesterday in a restricted video for members, we mentioned the possibility of this breakout. All of those support zones might give us a nice bounce up to break through that long-term resistance at $32. On the other hand, we are still very early in the ongoing intermediate cycle. So there is, I'd say, 40% chance that GDX just continues to push higher from here, breaking through $32, maybe retesting it over the next several days. That retest will actually give us a short-term cycle within the normal duration of, say, 1.5 months. The last candle we have for GDX is on 22nd of April. Looking at gold chart, we see that 23rd of April is another green candle, meaning that once the markets in the US open, we might see GDX slightly higher, possibly poking through that upper range of the Bollinger Bands. So my personal strategy would be to wait a little and see if another poke through the upper range of the Bollinger Bands turns GDX back down to complete two missions. Firstly, as I've just mentioned, It would be nice to see a cleaner daily cycle low on gold lasting for about a month and a half rather than just over 1 month. And the second mission for GDX would be to close this gap between $31 and $31.5. And if that gap is closed, GDX doesn't actually have to return all the way down to, say, 200-day moving average. Dropping back to, say, $30, $31 to close that gap might actually look better on the chart rather than dropping down to, say, $28 at that 50-day moving average. Because if GDX drops to only $31 and after that continues higher, that could be seen as a successful retest of the break and a more convincing launch higher. A retest back down to $31 might also bring RSI a little bit lower, creating more space before it has to hit the overbought area, which in turn will allow the next rally to be that much stronger before RSI is deep into that overbought area. So coming back to my trading strategy, I would probably have to add more of the partial positions if GDX just continues higher and say passes $34. But I would leave some small cash on the side in case of a fake out. On the other hand, if GDX closes this gap and turns around, I would allocate all of the remaining cash of the gold-related only part of the portfolio to catch that next convincing rally. If you want to catch the more particular levels and the timing as well as the targets for that next rally, join us at myfinancesteacher.org and stay tuned. And before you do that, I would like to ask you to hit that like button, subscribe to the YouTube channel if you haven't. I wish you a nice day and good luck in your trades.